In money matters, the JSE All Share Index is trading slightly higher, this in an attempt to halt 5 consecutive sessions of declines, partly due to a retreat in US Treasury yields. Standard Bank Strategist Global Markets, Mamokete Lijane, joins us now to dissect the latest market moves. Thank you very much for your time this afternoon. So the rand was stronger in early trade. On US Treasury yield volatility, how's it looking at this hour?
The rand has been really doing very well today. I mean, it's been a volatile few days where we've seen the rand go up to that big figure 19 and then it's come back quite a bit. So I think the key theme for markets at the moment is volatility, and the rand is equally affected. But I also think that overall from a rand perspective, given how we know the currency can move, it's shown incredible resilience given where US Treasuries have gone. But, on the whole, I think the broad story is one of US rates being very volatile and quite high, risky assets coming under some pressure, relative resilience in the rand, and, dollar quite strong in a sense, but also a little bit directionless.
Okay, oil prices are up, recovering some of the previous day's losses as investors remain nervous about the ongoing conflict in the Middle East.
Yeah, that's another source of volatility is what's happening in the Middle East, and how we think about how that war could evolve, and how many parties are going to eventually take part in the war, if at all any. So it's very important that that situation gets stabilized and it doesn't spread beyond where we are at the moment. Obviously, how this would play out, if it were to intensify and to spread, it would increase uncertainties around oil supply. And, that's why the oil price has actually been ticking up. If you think about where we were before the war started, oil prices were actually retreating from high levels. And we're starting to think at least that pressure that we might have potentially seen, that inflationary pressure wouldn't materialize. And then the war started and oil prices have kind of like been ticking up a little bit. So, it really is a very uncertain story. We don't know where it's going to end up. We're all watching it very, very carefully. And it has potential to be quite a deflationary or stagflationary shock for the global economy, and the markets, and in that context, markets are going to struggle to settle until, you have a clearer picture of how that's going to evolve going forward.
Okay. South Africa's leading business cycle indicator went up by some 0.4% over a month in August of 2023 rather. What does it tell us about the health of our economy?
I think the South African economy has been through the most. The first half of the year, the latter part of last year, was very much about this load shedding shock that manifested in high inflation and slower growth, which is sort of like the most toxic mix you can have for any economy. And we kind of I think, due for good news. So, the fact that, confidence indicators have stopped declining is in and of itself, I think, a good thing. We've seen load shedding improving or quite materially in the second half of the year relative to the first. So that makes sense in that context. So, I would say, right now we're looking for signs of stability at a minimum. And then we'll start to think about whether things start to improve from this point onwards. But I think even if you look at, you look away from, the near-term trends, there is no doubt that, load shedding has improved. The outlook for the economy should therefore start to improve. We saw the IMF last week or the week before upgrading South Africa's economic outlook for this year. And I think that was consistent with this idea that the availability of electricity has improved. So my sense is that, we've been through the low point from just a South Africa specific factor issue, and we're looking forward to an improvement in 2024 and beyond.
Indeed. South African Airways will resume direct flights to Brazil this month, the carrier's first intercontinental route since it emerged from bankruptcy 2 years ago. Is that what we call progress? I personally have missed South African Airways. So, from just that perspective, as a provider of services in the region that connects South Africa and indeed Africa to the rest of the world,
we haven't really seen a replacement of the service that South African Airways used to provide, definitely for the region. I mean, there are competitors that have taken up some of that space, so it's not like South African Airways is going to find the world, where it left it. Having said that, I think there is an opportunity for that airline to operate. I don't think, though people were worrying or were talking about who should own the airline, but there were never any question marks around whether there were routes for that airline to exploit. And the absence of South African Airways has been felt. If you speak to AXA, they spoke a little bit about that. The fact that the airlines, you don't see the exact same amount of airlines as what you saw before, has affected their performance. It affects passenger traffic. It affects pricing. So I think from an aviation perspective, and for broad growth or global economy perspective, it is very important that South African Airways come back to full flight, as it were. So to me, it is an improvement. And we look forward to further progress as far as restructuring and getting that airline to fly again is concerned.
Thank you very much, Mamokete, for your time this afternoon. Mamokete Lijane is with Standard Bank.